UK software companies are leaving an average of £56,000 on the table every single year. That is not a made-up number. That is the average R&D tax credit claim filed by companies in the information and communication sector, according to HMRC's own published statistics. In the next 7 minutes, I am going to show you exactly 3 things. First, how HMRC defines qualifying R&D for a software company. Second, the specific activities that do and do not qualify. And third, how to calculate what your company might recover. And I will tell you the one mistake that gets most first-time software claims either rejected or drastically undervalued. By the end of this video, you will know whether your software company has qualifying R&D activity. You will know which developer costs and which cloud infrastructure costs you can include. And you will know the next step if you want a specialist to assess the specific numbers for your situation. None of this requires a sales call, just 7 minutes. This video features an AI-generated presenter. All content is for educational purposes only and does not constitute tax or financial advice. Always consult a regulated specialist for your specific circumstances. Here is the context. In the tax year 2023 to 2024, UK companies filed 46,950 R&D tax credit claims. The information and communication sector, which is where most software companies sit, accounted for 26% of all claims. That sounds like a lot, but the number of first-time claimants fell 45% last year, which means there are tens of thousands of software companies that likely qualify and are not claiming. The reason is almost always one of 2 things. Either the founder's accountant has not flagged it, or the founder assumes their work does not qualify because it is not, in their words, scientific enough. HMRC's definition of qualifying R&D does not require you to be inventing something from scratch. It requires you to be resolving genuine technological uncertainty. And almost every software company that is building anything non-trivial is doing exactly that. Point 1. The qualifying test. What HMRC actually asks. HMRC asks 2 questions. First, is the company trying to achieve an advance in science or technology? For software companies, an advance means you are solving a problem that the existing tools, frameworks, or open source libraries cannot solve without modification. Second, does that work involve resolving genuine technological uncertainty? Genuine uncertainty means a competent professional, let us say a senior software engineer, could not easily solve the problem by applying existing, publicly available knowledge. If your lead developer is making design decisions, architectural choices, or algorithmic trade-offs that are genuinely unknown at the start, that is uncertainty. What does not qualify? Implementing a known algorithm, even if it is complex. Using a framework in the way it was designed to be used. Bug fixes that are routine maintenance. What does qualify? Building a new data pipeline architecture that solves a performance problem existing tools cannot handle. Developing a novel machine learning approach for a specific domain problem where no existing model performs adequately. Creating a custom real-time processing engine because commercial options were too slow or too expensive for your use case. Point 2. Which costs count? Once you have identified qualifying projects, the next question is which costs you can include. Staff costs are the biggest category for most software companies. This means salaries, employer national insurance contributions, and employer pension contributions for any staff member who works directly on qualifying R&D. You do not have to claim 100% of a developer's time. If a developer spends 40% of their time on qualifying projects, you claim 40% of their costs. Subcontractor costs can also be included, up to 65% of what you pay them. And from April 2023, cloud computing costs, AWS, Azure, Google Cloud, became qualifying expenditure. That means the compute costs you are paying to run R&D workloads are now part of your claimable expenditure. For many software companies, particularly those running model training or large-scale data processing, this is a significant addition to the claim. Point 3. How to size the recovery. Let me give you some concrete numbers. Under the merged R&D scheme, which applies to all accounting periods from April 2024 onward, a profitable company recovers approximately 15 pence for every pound of qualifying expenditure. So if your qualifying spend is £200,000 a year, developer salaries, cloud costs, subcontractors, you are looking at a corporation tax reduction or cash credit of around £30,000. If your company is loss-making, which many early-stage SaaS businesses are, and your R&D spend is more than 30% of your total expenditure, you fall under the ERIS scheme. Under ERIS, the rate increases to 27 pence per pound. On £200,000 of qualifying spend, that is £54,000 back from HMRC. The gotcha, the most common mistake. Here is the mistake I mentioned at the start. Most first-time software company claimants only include the direct R&D time, the developers working on the qualifying projects. But qualifying costs also include the line manager who coordinates the technical team in proportion to their R&D coordination time, the data infrastructure costs that support the qualifying compute workloads, and in some cases, the proportion of the finance director's time spent tracking and reporting R&D expenditure. Underestimating the qualifying costs is the single most common reason software company claims come in below the sector average. A specialist will identify these indirect qualifying costs, which is why specialist-supported claims typically recover significantly more than DIY or accountant-prepared claims. So, to bring this together, if your software company is solving technical problems that are not solved by existing tools or frameworks, you likely have qualifying R&D activity. Your qualifying costs include developer salaries, subcontractor fees at 65%, and cloud compute costs from April 2023 onward. The average claim in the information and communication sector is £56,000 per year. And the single most important thing to remember, you have 2 years from the end of your accounting period to file the claim. That clock is already running. If anything in this video resonated with your situation, the next step is straightforward. There is a free, no-obligation specialist assessment linked in the description below. It takes 5 minutes to complete. The regulated specialists I work with operate on a no-win, no-fee basis. So if your company does not qualify, there is nothing to pay and nothing to lose. The link is uplifttax.com/partners/E5J3P6. It is also pinned in the comments. If you found this useful, you might also want to watch the video on how much you can actually claim. That is the average recovery figure broken down by sector, or the video on why your accountant may not have flagged this. Both are coming up on screen now. I will see you in the next one.